Welcome to TechnoFunc Functional Capsules. These capsules provide introduction to a business process area and helps you build process expertise. The topic for this lesson is Introduction to Bank Reconciliation Process. This topic not only discusses the meaning of bank reconciliation process but also discusses how this process is handled in new age ERPs and automated reconciliation systems. This video is brought to you by www.technofunc.com, an institute one of its kind that enables people, processes and technology. The learning objectives of this capsule are: learn the meaning of account reconciliation and its importance in controllership process. Meaning of bank reconciliation process and its importance. Understand the cash clearing concepts and complete process. Learn the steps in automated bank reconciliation along with steps in manual bank reconciliation. What is account reconciliation? Account reconciliation is defined as analysis of the ending balance of an account with appropriate supports and documented explanation. Proper completion of the account reconciliation process is fundamental to ensuring the balance sheet is properly stated. Why account reconciliations? Personnel with responsibility for account reconciliations hold key controllership responsibilities. Account reconciliations are performed for many reasons, including timeliness, to ensure transactions are timely recorded in the journal ledger in the right accounting period following the matching concept under accrual accounting. Accuracy, to ensure transactions are accurately recorded in the correct statutory entity. Validation, to identify, document, track and explain transactional differences between general ledger and sub-ledger balances and or other independent sources. In case of bank reconciliation, general ledger balance is validated against the bank statement. Controls, to identify and guard against fraudulent activity, identify errors and reduce losses. Improvement, to conduct root cause analysis on any operational defects identified and execute process improvement projects to address them. Account reconciliation process. Validation of the accuracy of an account balance is achieved by doing financial verification as well as physical inspection. Confirmation is done with other parties and or other procedures are performed on a periodic basis to complete reconciliation process. Bank reconciliation process. Bank reconciliation process is targeted to validate the bank balance in the general ledger and explain the difference between the bank balance shown in an organization's bank statement as supplied by the bank and the corresponding amount shown in the organization's own accounting records at a particular point in time. This process is performed by a company to ensure that the company's records are correct with the bank's records and to ensure timeliness, accuracy and validation of transactions posted therein. Reason for differences. Such differences may occur, for example, due to following reasons. Checks not presented. A check or a list of checks issued by the organization has not been presented to the bank. Banking transactions. A banking transaction such as a credit received or a charge made by the bank has not yet been recorded in the organization's books. Errors. Either the bank or the organization itself has made an error while recording transactions. Deposit in transit. Cash or checks that have been received and recorded by an entity but which have not yet been recorded in the records of the bank where the entity deposits the funds. NSF check. A check that was not honored by the bank of the entity issuing the check on the grounds that the entity's bank account does not contain sufficient funds. NSF is an acronym for Not Sufficient Funds. Imagine a large utility company having operations in multiple cities and managing various bank accounts. Thousands of payments are being released every day to meet expenses of the company. Customers residing all over country are depositing money all in different bank accounts to purchase different products or clear outstanding invoices. How does such large companies manage their bank reconciliation process? Cash clearing process. Rather than hitting the bank accounts in cash clearing systems, the cash or bank transactions are parked in cash clearing account. Once reconciliation with bank statement is done, the reconciled amount is transferred to cash account or bank account. This provides a clear snapshot of lying unreconciled amount in the organization at any point in time. The cash or bank account reflects only the balance that has been reconciled with the transactions of bank. The cash clearing process enables you to track amounts that have actually cleared your bank versus amounts still floating in the banking system. The cash clearing process creates accounting entries to record the actual settlement in your cash or bank account in general ledger only when you clear the payment transactions in the system during the reconciliation process. Till reconciliation happens, the amounts are parked in cash clearing account. It creates the entries in the bank account only when the payments have cleared and they have been reconciled as cleared by the bank reconciliation process. The system does not create cash or bank accounting entries for unreconciled deposits or payments. This provides a clear snapshot of lying unreconciled amount in the organization at any point in time. Till reconciliation happens, the amounts pertaining to cash or bank transactions are parked in cash clearing account. This method focuses on the use of a special cash clearing control account to help provide an accurate cash on hand balance by including the effect of cash or bank transactions that have been issued but have not yet cleared the bank in reconciliation system. This provides a clear snapshot of lying unreconciled amount in the organization at any point in time. For example, when you release payment to any supplier for his due invoice, you typically debit supplier account and credit bank account. However, in cash clearing method, when you issue payment, you will debit supplier account and credit cash clearing account. Later, when you receive the bank statement and reconcile the payment, at that point you will generate another accounting entry, that is, cash clearing account is debited and bank account is credited. Hence, at this stage, the payment hits your bank account, keeping it always reconciled. Accounting entries in cash clearing process. The cash clearing process creates accounting entries for each scheduled payment that has been paid, reconciled and cleared for bank accounts using cash clearing method of reconciliation. These accounting entries are then posted to the general ledger. Cash or bank clearing account is used to record unidentified debits and credits in bank statement. At the time of reconciliation process, we have to debit or credit main account and offsetting will be done to cash or bank clearing account. Then only balance in the main account will match with bank statements. Cash clearing accounting examples. Cash clearing accounting for cash or bank transactions is a two-step process. Step 1. When the payment is issued and posted, the accounts payable liability account is debited and the cash clearing control account, as opposed to the actual cash account, is credited for the payment amount. Step 2. Later, when the cash clearing request is processed, a pair of balanced accounting entries are created to clear the net cash amount of the issued payment for each payment that has been reconciled. To determine the actual cash balance, add any debit or credit residue in the cash clearing control account from payment or deposit amounts that have not yet been cleared to the cash account balance. What is a bank statement? Bank statement or account statement is a summary of financial transactions which have occurred over a given period on a bank account held by a person or business with a financial institution. Bank statements have historically been and continue to be typically printed on one or several pieces of paper. They are either mailed directly to the account holder or kept at the financial institution's local branch for pickup. In recent years, there has been a shift towards paperless electronic statements. Most financial institutions now offer direct download of bank statement into account holders' accounting software. Bank statement lines. Given below are the types of transactions that generally constitute a bank statement: payments, receipts, cash flows, miscellaneous transactions. Each transaction is further supported with additional information. The typically available information could be of the nature shown here. This additional information is very critical for automated reconciliations, as you will notice in the upcoming slides. Bank reconciliation process. Step 1 is to upload the bank statement. Modern cash management systems provide for matching transactions from bank statements both automatically as well as manually. Step 2 is to reconcile with bank statement using automated clearing, where bank statement details are automatically matched and reconciled with system transactions. This method is ideally suited for bank accounts that have a high volume of transactions. Step 3 is the manual clearing. You use the manual reconciliation method to reconcile any bank statement details that could not be reconciled automatically. Step 4 is to review and summarize. Once the reconciliation process is complete, a review of reconciliation results must be carried out. Generate various reports to support this process of review. Step 5 is to generate unreconciled report. Generate a report with list of all unreconciled entries for further decision making and matching. Step 6 is to match unreconciled entries. Unmatched entries as reported by unreconciled report are to be investigated and matched manually. Open items in clearing account will be cleared to respective customer or vendor account after getting information from bank or other sources. The entries that still remain unmatched should be manually transferred to unreconciled account. Step 7 is to transfer to general ledger. After the reconciliation process, the accounting entries generated will be passed to the general ledger. The receipt and payment entries will be transferred into the actual cash or bank account in the general ledger when posted. And finally, step 8 is to post entries in general ledger. Once transferred to general ledger, the next step is to make the postings to the bank account, bank clearing account along with the payment clearing. The posting can be done for each journal or for the batch. Modern cash management systems provide for matching transactions from bank statements both automatically as well as manually. Upload bank statement. The bank statement can be either uploaded manually or in an automated way if available in the desired electronic formats. The bank statements entered are per bank account number and are identifiable by a unique number and statement date provided by the user. In the header data, bank statement, opening balances and closing balances are provided before creating the bank statement that acts as a control check to ensure all transactions have been uploaded properly. For the process of automatic bank reconciliation, generally the system requires electronic bank statement in a predefined format only. Automated clearing. In automated clearing, bank statement details are automatically matched and reconciled with system transactions. This method is ideally suited for bank accounts that have a high volume of transactions. The following 3 are the basic steps involved in automated clearing process. 1. Map transaction codes. Bank statement lines are coded to identify the type of transaction the line represents. Since each bank might use a different set of transaction codes, the first step towards automatic clearing is to map each code that is used by a particular bank for which the transactions need to be reconciled. 2. Matching criteria. Automated matching can only be done if you can find a common identifier between the transaction details as recorded in your subledgers and the bank statement. Automated systems generally match a bank statement line against a payables payment transaction, receivables receipt transaction, payroll disbursals and miscellaneous transactions using a transaction number such as the payment or deposit number, bank account, amount and currency. 3. Reconciliation tolerance. Reconciliation tolerances are defined in the system as percentages and or amounts. If tolerance is defined, then the difference between the statement line and subledger transaction line will be auto-reconciled when it is within the tolerance limit. The system also creates a miscellaneous transaction for the difference between the remittance batch amount and the bank statement line. Manual clearing. This method requires you to manually match bank statement details with system transactions. The method is ideally suited to reconciling bank accounts that have a small volume of monthly transactions. You need to also use the manual reconciliation method to reconcile any bank statement details that could not be reconciled automatically. Steps in manual clearing. 1. Check off all checks that are listed on the bank statement as having cleared the bank. 2. Check off all deposits that are listed on the bank statement as having cleared the bank. 3. Enter as expenses all bank charges appearing on the bank statement and which have not already been recorded in the company's records. 4. Enter the ending balance on the bank statement. 5. If the balances do not match, then continue reviewing the bank reconciliation for additional reconciling items. Thank you for watching or downloading our training material. If you need copies of this material for corporate training or commercial use, please contact info@technofunc.com for further details. To watch our other videos, visit us at youtube.com/technofunc.